asked me to chair has been working with all our teams in the day-to-day management of our company. Important and decisive actions have been taken to ensure that Stellantis is in the strongest possible position when our new CEO will be appointed. The timing of that appointment will be in the first half of 2025. Among other steps, we have been reducing our inventories, empowering our regions, and working closely with our dealers, our suppliers, and our unions. As a company, we are laser focused on the launch of new products and improving our operations in very difficult environments, both in our two largest markets. In Europe and the United States, policy and regulatory choices have put our industry under extreme pressure, while China is on another trajectory. This year, the Chinese automobile market is set for the first time ever to be larger than the American and the European markets combined. In the United States, the car industry is severely affected by tariffs. On top of the 25% tariff imposed on vehicles, we are impacted layer upon layer with additional compounding tariffs, including those on aluminum, steel, and parts. In Europe, the CO2 emissions regulations have imposed an unrealistic path to electrification, disconnected from market realities. In fact, governments in Europe, sometimes abruptly, withdrew purchase incentives, and the charging infrastructure remains inadequate. As a result, consumers are slow to transition to electric vehicles. With the current path of painful tariffs and overly rigid regulations, the American and European car industries are being put at risk. That would be a tragedy, as car manufacturing is a source of jobs, innovation, and strong communities. But it is not too late. If the US and Europe take the necessary urgent actions to promote an orderly transition. We are encouraged by what President Trump indicated yesterday on tariffs for the car industry. Before I conclude, I would like to say, in these months, it has been a privilege to spend time within our company with the many extraordinary people who work in Stellantis. And I would like to thank them, as I would also like to thank you, our shareholders, for your continuing support. We also want to make clear that our priority remains to build great cars for our great brands, for our clients all over the world. Now, I will hand it over to Doug Osterman, our CFO, who will take you through a summary of 2024. Thank you.
Thank you, John. Okay, let's walk through our full year 2024 results, which, as you mentioned, John, was a disappointing year for the company. I'll start with a summary of the key performance metrics on this first slide. In the second half of the year, to address excess U.S. dealer inventories, the company dialed up incentives and cut back on production, negatively impacting our AOI, which ended up at the bottom of the 5.5 to 7% AOI margin guidance that we had provided in the middle of last year. At the same time, success correcting inventory allowed us to begin normalizing production towards the end of the year, which limited the negative industrial free cash flow to 6 billion for 2024. That's closer to the better end of the -5 to -10 billion euro guidance range that we had provided. Consolidated shipments of 5.4 million vehicles were down approximately 750,000 units, or 12%, due to the following factors. Roughly a third of that 750 was as a result of the inventory reduction actions that I mentioned. About 2/3 were related to lower sales in 2024 compared to prior year, of which about half was due to temporary hiatus in certain nameplates, and the other half due to lower commercial performance and loss of market share. Net revenues of 157 billion declined 17%, as two factors exacerbated the lower shipment volumes. First was mix, particularly due to a lower contribution from North America, and secondly, FX headwinds in the third engine regions. Adjusted diluted earnings per share of 2.48 euros declined 61%, with AOI down 64%, but the average share count 5% lower as a result of buybacks. Now let's get into how we've been working on fixing the root causes of the operational issues that we faced in 2024. We've set up to be in a better position on three critical factors in 2025. First, inventory discipline. Second, market coverage. And third, competitiveness. On inventories, we normalized European levels in the first half of the year, and then in the second half reduced U.S. dealer stock from 430,000 units at mid-year to 304,000 units at the end of the year. Second, as John mentioned, we are very focused on launching a number of exciting new products into the market. Not only late 2024 launches of the initial Smart Car and Stella Large products, these are nameplates like the Citroën C3, the Dodge Charger, and the Jeep Wagoneer S, but also Q1 2025 introductions of the Citroën C3 Aircross, the Opel Frontera, the Fiat Grande Panda, and our heavy-duty pickups in the U.S. market. Last but not least, there was progress on making our cars more affordable as we exited 2024. For example, in the U.S., we repositioned the MSRPs on 4 of our key 2025 model year Jeeps. And in Europe, our new generation of appealing B-segment cars bring BEV and mild hybrid powertrains to new and attractive price points. Now, the next slide, let's shift our attention to adjusted operating income. AOI came in at 8.6 billion euros. That was a steep pullback from the 2023 record AOI of 24.3 billion, in large part due to marginal profitability in the second half of 2024, when inventory clearing in North America and transition gaps in Europe brought temporary revenue and profitability impacts. We've detailed the headwinds of volume, mix, and pricing already, but industrial costs were also higher by 1.5 billion, with most of this coming from North America, mainly driven by incremental warranty expense and side effects of volume reductions that I mentioned. And lastly, we had 2.5 billion euros of negative impact in foreign exchange. Let's take a look now at industrial free cash flow. Obviously, last year was a very difficult year with 6 billion euros of cash outflows. There's a couple of things I want to point out that are important. First, although the main reason for the lower cash flow was just the lower AOI, We were also, though, impacted by growth in working capital of nearly 5 billion euros. And we had around 1.6 billion euros higher capital expenditures as we launched a lot of new models. Moving forward, we expect more normalized production schedules to stabilize the working capital and flattish capital expenditures as the new product launch cadence normalizes a bit. On this next slide, we can look at the specifics of each of the regional segments. In North America, of course, I want to recognize that the inventory reduction actions and progress repositioning our pricing relative to peers pressured our results in 2024. But this also sets the region up for an improved position at the start of 2025. In Europe, we had an unusual gap in production of our A and B segment products, which reduced second half volumes by well over 100,000 units. The B segment successors are now in production, providing improved market coverage going forward. The third engine region collectively saw a 7% revenue decline, but would have been up single digit, excluding the impact of FX translation headwinds. Combined AOI margins in the third engine were down only 1 percentage point at a healthy 14%. To finish my presentation, let's have a look now at the return of capital to shareholders. The company's strong balance sheet allowed it to execute the 2024 capital return plan without interruption. This continued a track record of annual material returns to shareholders that began in 2022. For the 68 cents per share proposed dividend, the company calibrated the payout at 1.7 billion euros, the top of our 25 to 30% policy, and then supplemented that with 300 million euros of enterprise value recognized by the Comau transaction. This delivers on the commitment the company made to separate Comau for the benefit of our shareholders. The balance sheet ended 2025 in a strong position with 32% ratio of liquidity, slightly above the top of our 25 to 30% target. Given the early stage of our commercial recovery, we clearly don't expect to be doing any stock buybacks in the first half of 2025, and only will evaluate returning to buybacks as income and cash flow improve. Thank you for your attention for the review of the calendar year 2024 financials. And now back to you, John.
Thank you, Doug, and well done for your first AGM as our CFO. Thank you. We will now proceed with the meeting formalities. Due to prior commitments, other board members and proposed appointees are unable to attend. Mr. Giorgio Fossati, the board secretary, is appointed as secretary of this annual general meeting of shareholders. Thank you, Giorgio. Notarial minutes will be recorded by Mr. Dirk Jan Smit of Freshfields, Amsterdam. Thank you. I welcome Mr. François Buzy and Mr. Christian Binkhorst from Deloitte, the company's external auditors, who are available to answer questions about their audit report on the company's 2024 annual accounts. Journalists will observe the proceedings from a reserved room. The meeting is broadcast live on Stellantis' website. Thank you to those connected via webcast. The meeting will be held in English, with headphones available for simultaneous translations from English into Dutch, French, or Italian. The meeting notice was published on the company's website on March 3rd, 2025. The meeting has been convened in accordance with legal and statutory requirements. Please switch off your mobile phones and similar equipment, as audio-video recording by shareholders is not allowed. To ensure a smooth meeting, please reserve time at the shareholders' assistance table if you wish to speak on agenda items and specify the issue. When granted permission to speak, state your name clearly, and if applicable, the name of the person or company you represent. Speeches must be concise and relevant to the agenda item. Disturbances, offensive, or improper speeches will not be allowed. I reserve the right to limit speaking time to approximately 5 minutes per speaker per agenda item, and to deny further speaking if time limits are exceeded or questions are unrelated to the agenda item discussed or the business of the company. Questions should preferably be posed in English, with responses in English. Questions may also be in Dutch, French, or Italian, with responses in English. Agenda items and sub-items will be discussed in sequence. Discussions and questions on sub-items will occur after all sub-items are introduced. Voting on sub-items will be deferred until after the last sub-item discussion. Preliminary voting results will be displayed on the screen after the vote, including proxy votes received before the meeting. Abstained votes are not counted. Official results will be published on the company's website after the meeting. Please insert your smart card into the voting device with the chip facing you.
Okay, so if you're wondering what's going on, today is the annual shareholders meeting, and some of this stuff we can't broadcast because they don't want it to be broadcast. But anyways, it's gonna be a very interesting day for Stellantis because the stocks have been crazy low over the last year. If I just type in the stock right now, it's actually up a little bit. So far today, it's up 5%, which isn't much because it's only 50 cents up. But it's almost, well, it's $9.37 as the market starts today. It was down 12 cents before the market started, but nonetheless, I mean, it's kind of gone up since yesterday. Yesterday it hit a low of $8.77. So if you look at the year to date, there's a huge gap. Even the last 6 months, it's just fallen off a shelf. And yeah, I was hoping they would say something about future product and whatnot, but it doesn't sound like they're going to talk about future product. Usually, sometimes during the annual meetings, they'll mention like product launches and stuff like that. I was hoping to hear something. We might see something later. Let's see here. Usually, they might have the actual notes here, but I figured I'd come on here and broadcast it for you guys so you guys can kind of see behind the scenes kind of stuff of what we do and gathering information. Yeah, so right now they're just voting on certain things for the stockholders. So let me see here. Press release. Let's see. I don't need the press release. I already have that. So, but anyways, it's going to be very interesting because, again, with Carlos Tavares gone, they're trying to rewrite the ship. And now, all of a sudden, they have the tariffs from the Trump administration. Europe is down. You heard what he said, that China looks like it would be the biggest, basically the biggest market in the world going into this year, because sales in, not just for Stellantis, is down in North America, but people aren't buying cars right now. The reason why is, even with like Stellantis and Ford putting, employee pricing on vehicles, it's not attracting people because the interest rates are still too high. In Europe right now, basically Europe has transitioned over the last couple of years to be this EV-centric market. And unfortunately, because of that, there's a huge pushback against EVs in the EU. And the reason why is because they're too damn expensive, just like here. A lot of people can't afford vehicles over there. And over there, it's a lot different. You don't have to buy as many cars because they have mass transit. We're here in the United States, we depend on cars. We don't have high-speed trains going everywhere. The fastest train we have here is like Amtrak. And it goes across country, but you're limited to what you can do with it. And there they have, high-speed rail. They have, everything's kind of intertwined. And they have, obviously, airlines. So a lot of people don't use cars like they do here in North America. So this whole year, they promised at the beginning of the year that they were going to say, this is going to be a record year for sales. But they didn't expect the tariffs. And, the one thing about, I look at it at both sides, because a lot of people don't understand is, Mopar insiders, so I live in Detroit, and then Jared Belfort lives in Ontario. So we look at two different aspects. Jared's looking at it like, hey, everything's shut down here. It's really bad for our economy. I'm looking at it as, yeah, it kind of sucks in a way, but it's kind of bringing manufacturing back to the U.S. So there's a whole different kind of aspect to it. The thing is like we get a lot of our parts distribution from, Mexico and from like especially Ontario. So those are being taxed too. So even if they build HEMI engines down in Mexico, those are subject to 25% tariffs. So let's say they cost $1,000 to to build a HEMI engine. I'm just throwing this out. It's a little bit more than that, but let's say it costs $1,000 to build a 5.7 HEMI, and they're going to put them in the Ram trucks. Well, if they bring it across the border, it's going to cost now $1,000 or $1,250 because they got to pay that tariff on top of it. So it's going to raise cost a little bit, and that's what's bringing manufacturing back. In China right now, they are devastated because of the Trump tariffs. Trump put a 148% tariff, I think it was, on China. And they basically, there's tons of companies that are complaining on TikTok, like Chinese companies complaining on TikTok that they're canceling orders because they're going broke. So we're going to see this massive, massive shift in just exports and imports in general for the U.S. It doesn't matter if it's cars, it's going to be everything. So another thing that we're waiting for is the Canadian election on April 28th. So right now it seems to be neck and neck with at least what the polls are saying. I doubt it, but the polls are saying that it's neck and neck between the Liberals and Conservatives. In the last 12 years, the Liberals have been leading Canada, and they've been adding all these carbon taxes. Gas prices have gone up. They're not producing any additional oil. We buy their oil here from in the U.S. super cheap from Canada, and they don't have a plant to refine it. So they sell it to us. We send it down to Texas. We refine it, and we actually sell it back to them. So we make really good money on their market. But right now, Alberta, which is like the Texas of Canada, is in deep crap because they're looking at, because of this whole tariff agreement and stuff like that they're going to be having a deficit of like $5 billion. So that's just that one province alone. So the U.S. has the upper hand, but the thing is like we're waiting to see what's going to happen with the elections going into May. We're going to know something for sure by April 29th. And if it's a conservative government, guaranteed it will probably be right to the tables for trade. Mark Carney, who is the acting, well, I say acting, he's the interim prime minister. He has to be elected to actually get all of the, bring parliament together over there. He is a World Economic Forum person. He believes in like this whole new Green New Deal kind of stuff. He's very anti like oil, even though his manufacturing his company that he was the CEO of, which is funny because he just moved their headquarters to the U.S. because the taxes were too high in Canada, and he's going to raise corporate tax there. But anyways, he was basically saying like, hey, we don't need the U.S. anymore, and we're by far their biggest trading partner. So they're looking at doing more of a Europe thing. So really, if the conservatives come in, they're going to go right to Trump and talk a fair deal. And hopefully we'll see these tariffs end, at least with Canada, probably, I would say, 2 weeks into May. So it's going to be very interesting, especially considering that Stellantis imports 40% of their vehicles to the U.S. And they're by far the worst for it out of the big three. Ford only imports, I think 20%, and I think GM does like maybe 30%, something like that. But the weird thing is like, so GM just announced that their Bright Drop commercial vans, their new electric commercial vans, they're basically they're built in Ontario. They haven't been selling that well to begin with because they're so expensive, and what they're doing is they're actually they've actually decided, hey, we're not going to build as many, and they've cut 900 jobs, and they're looking at closing the plant indefinitely. So, I mean, it's kind of gone everywhere over there. Let me see if I can pull it up. Hold on here. GM rate drop. I'll show you, but it's affecting every single automaker, not just Stellantis. So what we've been hearing from our contacts over in Ontario, they've been saying that, hey, we are going to probably, like Windsor, for example, is shut down. Brampton's being basically redone. But what they're saying is we're looking at an additional couple weeks off because of, they're probably going to wait for the election. So they were supposed to go back at the end of this week, or actually like starting Monday, they were supposed to go back to work at Windsor. But I'm sure we're going to hear something that they're going to extend the layoffs pretty soon. You can see here, this is their production plant in Ingersoll, Ontario, and they just laid off 900 people there. So it's going to be very interesting. So the trucks that are built in Canada, the half-ton trucks, they've actually, or no, where does GM build them? I think they build some in Mexico. Sorry. They build their half-ton trucks in Canada too. Well, anyways, what they did was they basically extended production at Fort Wayne. So they're actually bringing their half-ton truck production back to the U.S., like a lot of it, because they don't want to do the tariffs. And here's the problem: the whole tariff thing is they moved Ram 1500 production down to Saltillo, Mexico, where basically down at Saltillo Truck they build all the Ram heavy duties, and it was originally planned back in 2018. We can go look at that when Sergio Marchionne was running Fiat Chrysler. He basically announced that, hey, the new Wagoneer was coming to Warren Truck, but he was also going to bring the heavy duty here. The heavy duty is one of the most, like, if you look at a breakdown of the cost of building a vehicle and profit, the heavy duty trucks are by far, some of the most profitable vehicles that they build. And you can see right here, this is back in January 11th, 2018. This is before we started Mopar Insiders. This right here, this article here from Motor Trend was basically, so how things used to work at FCA was every year Sergio Marchionne would go into basically the North American International Auto Show in Detroit, and he'd have a press conference with the press, and he'd basically talk about what's going to happen and what they're going to do. And this is on that date. And basically he said that they were going to move production of the next generation Ram heavy duty pickups, which they say next generation. It wasn't the next generation truck. It was the updated 2019 trucks from Mexico to Michigan. However, why that never happened is because in 2019, Sergio actually passed away. And at that time, Mike Manley came on board, and he was told by the actual board and the Angeli family, who owns a majority of Chrysler. That's John Elkins' family, the guy you were seeing earlier. They were basically told, hey, Oshawa. Thanks, Proud Canuck. That's right, Oshawa does it. But anyways, he was saying that, they were going to look and find some company to merge her with. And Sergio was kind of looking at that, but at the time, a lot of people don't realize Sergio was trying to do a hostile takeover of General Motors. There was a lot of things that came out of the woodwork with Sergio doing some really shady stuff with the UAW. And basically he was paying people under the table to kind of take like worse conditions for GM. So Stellantis had a one-up kind of deal. And you can see back here, Sergio was going around telling everybody, like, this is a Reuters article, if it will open here. He was going around and basically telling everybody, like, hey, we want to merge with GM. And at the time, Mary Barra was pretty new. She was like, no, we're not going to do a merger. And he was basically trying to undermine to do a hostile takeover of General Motors. The thing is like, again, he probably would have been in some deep crap if he was still alive, because there was a lot of stuff going on that was found, like paying people, and it was just kind of crazy. And GM sued Chrysler over this racketeering suit, and you can see right here in Forbes Let me see if it loads here. You can see right here in Forbes that GM files racketeering lawsuit against FCA, names Marchioni. So you can see General Motors Corporation said, now back, you got to remember this is November 2019. Come on. It says General Motors Corporation said today it has filed a federal racketeering lawsuit against the rival FCA and former FCA executives who have already pled guilty in the ongoing federal corruption investigation, and also names in the suit FCA's late CEO Sergio Marchioni, claiming he orchestrated a multi-million-dollar conspiracy in part as a means to force a merger with General Motors. Marchioni died unexpectedly July 25th, 2018. So right after he died, they put Mike Manley on board, and they wanted to merger with somebody, and Mike Manley was kind of forced into finding and basically finalizing the merger with Peugeot. So you got to remember, they were actually, before Peugeot and all that, they were talking with Renault about merging. There was talks about that. There was talks about a couple of different companies, but GM was the one Sergio wanted. He wanted, he loved how the operations here in North America went. And when he ran FCA, it was actually really good because he ran the European division completely different than the North American ones. They were kind of independent of each other, still working as Chrysler on the one side and still working as Fiat on the other, but they had synergies together, sharing platforms, sharing engines, but they kept all their other tasks separate, and it worked. But the thing is he was trying to undermine this hostile takeover of GM, and I don't think a lot of people understand how in-depth it was. So a lot of things going into what formed Stellantis, and we've seen Carlos Tavares come in, and he was a totally different person than Sergio Marchioni. Carlos Tavares comes in, and he was known for saving Peugeot. And basically what happened was at Peugeot was they were in terrible, terrible financial problems. And he come in and he started cutting everything, just like he was doing at Stellantis. And it saved the company from bankruptcy. So he was he was put up on a pedestal saying like, hey, this is how great of a CEO he is. So that's why they made him the CEO. As part of the merger, John Elkann got to keep his chairman status like he was for Fiat Chrysler. And the Peugeot family put Carlos Tavares in the CEO position. The problem was, at the time when this company actually formed, the Biden administration had come in and basically said, hey, just like several other European countries, they decided to go to this new Green New Deal thing, bypass where they were going with plug-in hybrids, go into EVs. And the problem is when you go into EVs, their cost is a lot more expensive because of the batteries and whatnot. And now you're running into problems, like we're seeing massive problems with EVs just in general, not just the cost, not just range, but disposing of these EVs. Because what we're learning after having now with a decade of like Tesla cars and stuff like that, it's a lot different than what people had thought. Now, Tesla does a pretty good job with how they operate. Obviously, they're by far probably the wealthiest automaker in the world right now because of, even with their stock being down, Tesla, they build a lot of their stuff in-house. They do a lot of things in-house. So they can kind of control the electric car market and the pricing and stuff. So like you seen when the Dodge Charger Daytona came out, and it was priced pretty heavily when it launched. Obviously, a fully loaded one was $86,000. The Model S Plaid, which outperforms it tenfold, compared to the 670 horsepower Dodge Charger Daytona, the Plaid has 1,020 horsepower. It has a tri-motor setup, all this stuff. Elon, if you go on to Tesla's website right now, which we can, if you go and buy a Tesla Model S Plaid, I don't want to close that out because I got to pull some stuff for an article later. If we go on to Tesla's website, you can look at the price. He dropped the price of the Plaid. Now, when the Plaid came out, it was like $125,000. Now, it's $93,000 if you pay cash. It's a little bit more if you don't, but he's lowered the price of the Plaid like dramatically just to compete and just overshadow anything that the Dodge Charger can throw at it. And you can see like This is the long range. Well, that's the Plaid, but the long range model has 348 miles of range. The Dodge Charger RT has 308. 0 to 60 time, 1.99 seconds, 200 mile an hour top speed. And then you look at the long range one, it's pretty impressive because, again, the long range one that they sell is even cheaper, and it's 348 miles range. But if we go to order a Model S. Let's see here. A little slow today. All right. So we go to order a Model S, and you don't click, like, obviously I'm in Michigan. It always says include gas savings. I'm not including gas savings. If we come down here and don't put any add-ons on, obviously, you can look here. There's a lease payment, but let's do... So this has some options. It's got it's got an order fee and a $1,390 destination charge. So $96,000. I can get this exact Model S Plaid for $96,630. Considering that's $10,000 more than the Dodge Charger Daytona was, and you get a lot more performance. It's kind of stupid how it wouldn't, be a better option. So we'll see, but yeah, it's kind of funny in a way because it's just like, Stellantis has all this stuff against them right now with the tariffs, them producing too many cars outside the U.S. That's really penalized them, and they really need to get back to basics. Like, I don't understand why they can't build the Ram heavy duty here. For how many of these vehicles are produced outside for the export market? They could do it here and be very profitable, and the amount of income that they make on these heavy duty trucks, they could easily have them here, and with the wages of the UAW, kind of balance it out. And they could have all the plants running here full steam ahead. Like, when Warren Truck's only down to one shift. And right now, they're temporarily laid off because they don't have enough engines, because they're building HEMI engines right now down at Saltillo North. And the problem is now they're pushing back Hurricane engines, so they're pushing those Hurricane engines into production for just the Ram 1500 right now, because they sell a lot more Ram 1500s than they do, obviously, Wagoneers. So we'll see. Don't compare it to a Plaid. The Model 3 smokes the Scat Pack, and it's cheaper. Well, that's true, but when you talk about pure size of the car, and you talk about, like, if you're comparing the actual car to what it is in its class, the Model S compares to the Dodge Charger Daytona. The Model 3 is cheaper by far, but it's also a mid-sized car. And having a mid-sized car with, how many horsepower does it have? It's got like 600 horsepower or something like that. It's gonna blow it away anyways, because like when you talk about EVs, it's all about weight. So, but the thing is like, the whole point was Tesla kind of controls the market because they do everything in-house, and a lot of people don't know that Tesla is, if you break down the top 5 vehicles that are mostly built here in the US, meaning like all their components and everything, like if you take all their parts and the assembly process and everything, are Teslas. The Model S, Model Y, Model X, all of them, like the Giga Texas in California crank out a ton of vehicles, and they're the most American vehicles you can buy. And that's pretty freaking sad, considering that we have, Chrysler, Dodge, Jeep, and Ram, which are American legacy brands. Chrysler's like right here. Chrysler's turning 100 this year. Dodge is what? Dodge is now 111 years old. And then we have, like Jeep's what, 83 years old? 84 years old this year? So we have these legacy brands, and they don't take advantage of building anything in the U.S. Like Chrysler, for example. I mean, you love the Windsor assembly plant. I know a lot of people that work there. It's a great place. The people in Windsor are great. They're right across the river from us. But we don't have a Chrysler vehicle anymore that's built in the U.S. The last one to be built in the U.S. was the 2015 to 2017 Chrysler 200. So everything, like, even like, look at I had a 300C, right? That was built in Brampton, Ontario. So Chrysler's technically, it's funny because they had the whole imported from Detroit, marketing scheme, like theme for the 200, and it was a super successful marketing scheme. It kind of went on here in Detroit. Like, people that even drive Chrysler stuck those stickers on their vehicles because they're proud of, the Detroit manufacturing heritage. But unfortunately, after the 200 was done, Chrysler doesn't build cars here in the U.S. So it's kind of weird. I mean, you think about it, it was an American brand. It's a full out American brand, but they don't build cars here. And then you look at Dodge. Dodge has 3 vehicles right now in their lineup. The Hornet's built in Italy. You look at the Dodge Charger Daytona, it's built in Canada. And then you look at the Dodge Durango. The Durango is the only vehicle built here in the U.S. for Dodge, and that's built in Detroit. You look at Jeep. Jeep builds by far the most in the U.S. Toledo builds the Gladiator and the Wrangler. You got Mack and Jefferson, basically the Detroit area or Detroit Assembly Complex. They build the Grand Cherokee. But even then, we're looking at the Grand Cherokee sales globally scaling back because they just announced that Jeep Europe will not be selling the Grand Cherokee anymore. Instead, they're going to be selling the Wagoneer S. So the Wagoneer S will ultimately replace the Grand Cherokee. Even though the Grand Cherokee is bigger, it just hasn't sold like they had hoped in Europe. And, you got to remember, European streets are smaller. And even though it's in a full EV, they do have the infrastructure over there. But the problem is they tariff the hell out of the U.S. And that's where Trump's going at. The EU tariffs our stuff way more than what we tariff their cars. And when you look at if the Wagoneer S is built in Mexico, they can send it to Europe and sell it cheaper than what they can a Grand Cherokee because of the tariffs. How stupid is that? So, I mean, you got, let's see. Not only that, but you have the Compass is built in Mexico right now. The next generation Compass is going to be built in Canada. We don't have a Renegade anymore, and that was built in Italy. And then if we do get another Renegade, it's probably going to be coming from Europe. You look at the new Cherokee is coming. Now, there's rumors that might shift because that vehicle is only going to be for the Canadian and U.S. markets. However, that vehicle right now is scheduled for production in Toluca, Mexico. So that's not an American-built Jeep. The new Recon that's coming out, the all-electric Recon, and eventually, hopefully, a hybrid version of it, that is a global Jeep. That's replacing the Wrangler in several markets, like Europe. So the Wrangler's not even going to be sold in Europe anymore. But the Recon is built in Mexico. I mean, yeah, you look at the lineups, and Stellantis builds way too much of their stuff outside the U.S. And it's not just affecting the North American market here. I mean, it's affecting global stuff too, because now, again, like we're seeing that because of the tariffs, it's not because of Trump. Trump's trying to make it like a fair playing field. If we look at like what the tariffs were, basically they were charging us a 10%. Let's just say the UK. UK was charging us 10% to import our cars. We were charging them 2.5. For any built, English car, it was 2.5%. How is that fair? It's not fair. And the problem with Canada right now, it has nothing to do with being like fair trade. We did have, the USMCA. The problem is the border, and Trump has made that he's basically come out and said, hey, we have a problem with drugs here. We need to focus on getting more people on the border, and he's kind of penalized the automotive industry for it. And he's basically come out and said, hey, I have no problem. Ontario's biggest market is obviously their auto industry. And he's basically come out and said, hey, if your guys aren't going to like listen to me and go after and put more people on the border to secure the borders for the two countries, I'm going to tax the hell out of you. And that's what he's done. And he's made it's very simple. He told the Trudeau administration, hey, we won't go through this if you guys put more people on the border, and they didn't. So it's come into this whole thing where now, in the past several weeks, we've seen, basically he told everybody, hey, don't retaliate. We're gonna match your tariffs, or we're gonna give you like he came out and said, hey, we're gonna do half your tariffs. So some countries were charging us, charging the U.S. like 84%. So he decided, hey, we're gonna do half. So we're going to do, 42%. And he came out and said it. It was way different than what everybody had originally thought, because he thought he was going to match everything. He did either matching for the small tariffs, like 10% or whatever. But he, went half on these countries that charge us outrageous tariffs. And he said, if you retaliate, we're going to up the tariffs. The problem is Canada decided to retaliate. Mark Carney, who's the acting prime minister, basically comes out and says, we don't need the U.S., so we're going to tax them. Well, them and China were the only two countries that came out and said, basically, hey, we're going to retaliate against the U.S. So while Canada does get a 90-day pause in most of the tariffs going in, the auto industry doesn't, because that's the biggest one for Canada. So that's going to be affected by these tariffs. So Trump's like, oh, well, so he's penalizing them. And it sucks, because if you're a Stellantis fan and you're going to go buy a car, like obviously you're going to go buy a minivan and stuff, it's going to be harder now. And then we might see, depending on what the, what government gets in, which if it's the conservatives over there, they're probably going to go to the table immediately and talk to Trump and get something going on. And Pierre Poilievre has actually said, he wouldn't even mind 0%, on tariffs between the U.S. and Canada, as long as it was fair. If it was equal, he would have no problem with that. So you can imagine that if the conservatives win, that we're probably going to see, a better flow of between Canada and the U.S. The thing is like, the way the world acts right now, how can I say this without sounding like too crazy political? The world is trying to, let's put it this way. Trump is tired of the U.S. to get just taken over with these tariffs, like getting taken advantage of with all these export tariffs for us. Again, like I said, you go over to Germany, they charge us 20% on our vehicles over there, but we only charge them 2.5%. It's not fair. It's not fair. We can't be competitive for products that we make here. So it's kind of, readjusting the marketplace. And it's really affecting China right now, bad. So it's going to be very interesting over the next couple of weeks to see how it goes. But the way it's going right now is it's really screwing Stellantis, like majorly screwing Stellantis. So let's see here. Keep buying foreign. Well, the thing is, it wouldn't be so bad if it was like fair between the U.S. and Canada. If you look at the actual wages and stuff, they're pretty close between Unifor and the UAW. Even with the actual difference in our money, they're pretty close. The thing is here, it's just weird because we've cut back so much. If you look at Stellantis' actual operations in Canada, it's not that big. They have 2 assembly plants. They have a research and development center. They have a headquarters in Windsor. And that's about it. But that plant in Windsor is a key plant because those minivans, that's all of what Chrysler sells. There's over 120,000 units they sold in the U.S. Well, not over 120,000 because they sold about 5,300s last year. So let's say 115,000 units just in the U.S. alone that are coming across that are just Chrysler minivans. So that's a big number. You look at how many Durangos were sold last year in basically in the U.S. It was like 59,000. So the Pacifica outsells the Durango big time, almost double. So you can see the vehicles that they're producing here in the U.S. don't sell as well as the ones like the Pacifica, and eventually, you're going to have the Compass up there, the next generation Compass, that will probably sell really good too, because the Compass is a high selling vehicle here. So we'll see. But I predict that there's going to be some huge production shuffles going on. I talked to somebody, was it somebody with UAW, a week and a half ago, and they said that they were coming to Detroit to basically have a meeting about basically with Stellantis about finding out what was going to happen, because there's it doesn't sound like all the stuff that we have heard is going to happen. So we've heard like Belvedere is going to have the midsize truck, and originally they were, during the contracts back in 2023, they had announced that that midsize truck was going to be built at Belvedere, but wasn't going to be built until 2028. Excuse me, 2028. But the big thing is, then they told them like, hey, we're not doing anything here. Basically, they were stripping the plant out and sending their tooling and their stamping stuff elsewhere. And then the day that we found out that the truck was back on, literally the night before they found out, the workers at the UAW, the workers at Belvedere found out. And then there was rumors going around that, hey, that truck might go to Toledo South. And you might think, well, isn't it a unibody truck? And, is it, isn't the Gladiator a body on frame? Yes. But Gladiator sales have been so dismal that they might move the Gladiator to Toledo North. That's what we've been hearing for a while. We can't confirm it, but we've heard that the Gladiator might move to the Wrangler side. And then that will free up something in Toledo. So that if they did something like that, that could possibly lead to other vehicles going to Belvedere. They can't. Here's the thing. Belvedere, is not an outdated plant by any means. It needs some updating, but it's not drastically outdated. Back in 2018, when they got the Jeep Cherokee, when Cherokee production moved from Toledo to Belvedere because they wanted to start production of the Gladiator, what happened was they got all the best tooling from Toledo. And at the time, they were closing down the Sterling Heights plant for the 200, which they just invested billions of dollars to build that car. And then they canceled it because they decided, hey, we're not going to do cars anymore. We need more room for pickups. And they ended up sending the best of tooling to Belvedere. But Belvedere does need a slight update, but it doesn't need a drastic investment. The thing is, it would cost more to go out and build a new plant, and it would take longer for them to just go and retool the one that they have. So they need to start, the whole point of this is that not the fact that they need to really shuffle production around so much, is the fact that they need to build affordable vehicles. Everything in the Stellantis lineup is totally unaffordable for most people. So we've been seeing huge lease deals on Dodge Charger Daytonas. And I'll admit, I went yesterday to the dealership and I went and looked at Charger Daytonas. I've driven the car several times now. I've driven a couple of them. It's not a bad car. I'm not an EV person, but with the leases going the way they are, they talk about this employee pricing aspect. The thing is, a lot of people don't understand this.